What's up, guys? Welcome back to DCA. Today what we're going to do is take a look at a group of metrics which are going to give us an insight into the behavior of short-term and long-term holders at the moment, and may be able to provide some insight as to what's going to happen. So I think there's a lot of question on people's minds as to whether this is a bull trap that we're seeing right now or whether this is a true rally. And while I don't think there's any one metric which can definitively tell you what's going on in the market and what's going to happen in the short term, I think there are metrics which can show us historically what the smart money individuals are doing at the moment. And when I say smart money individuals, I'm simply referring to the individuals that have historically acquired the asset at the lowest points in the market and then distributed the asset into the market strength of the bull run and selling it into the retail market. So we're going to look at a group of metrics which I think will give us great insight as to what's going on. So the first thing we're going to look at are HODL waves, but specifically what we want to look at is the HODL waves for short-term holders. Now, if you don't know what this is, this basically just shows us what percent of the total coin supply is held by these various groups. So we're looking at coins that have been held for 24 hours, coins that have been held for 1 day up to a week, coins that have been held for up to a month, up to 3 months, and then finally up to 6 months. Now, why are we doing that? Well, historically, individuals that hold an asset for less than approximately 155 days are statistically much more likely to sell the asset in the short term. If you look at this yellow line, this is where we're at right now. Notice that we are at the lowest point for the percentage of the Bitcoin supply ever held by short-term holders. So currently, we're sitting right at around 23 or 24% or so. So what that's telling us is that long-term holders, individuals that have held the asset for more than 6 months, have been acquiring more and more and more of the asset. And if you look here, we've seen times in the past when we reach into these lower levels of the percent of the Bitcoin supply that is held by short-term holders. These have historically been absolutely excellent times to be buying the asset. They don't always result in an immediate turnaround or recovery for the market. They do tend to show you times at which the market is, if not immediately, going to start showing strength within some relatively short amount of time. So it doesn't always mean that you have to be at the bottom for the market. But what it does typically indicate is that the tide is shifting. Okay, and that's what we've seen here. Ever since we hit our peak back here in April, and then had our capitulation event in May, we have seen the amount of short-term holders just precipitously drop. And that sort of speaks to the fact that, as we've been mentioning on the channel a lot lately, the retail market for crypto has just sort of, evaporated ever since May, ever since, China decided to ban crypto, ever since Elon Musk tweeted that Tesla is no longer accepting Bitcoin. They were FOMOing into the market. They were FOMOing in through the end of 2020, all through the first quarter of 2021. And then, they had a lot of altcoins on hand, and then the market just crashed on them. And I think that was a shock for a lot of people, especially a lot of new people just coming into crypto. And you can see the number of short-term holders has just plummeted. So we're sitting at this point right now where we're at a new all-time low. And quite frankly, when we've been down at around this level any time in the past, this has been a time where, if not an immediate short-term turnaround has been on hand, an impending longer-term turnaround. Okay, so the next thing I want to show you is the miner reserves. Why are we looking at this? Well, there's a few reasons, but in general, you have to think of the miners as being sort of, first of all, they have a major influence on the market, right? They are constantly acquiring new Bitcoin And they are the ones that have to decide what they want to do with it. Do they want to sell it? Do they want to dump it onto the market? Or do they want to sort of hold on to it and keep it? Because ultimately, they use the Bitcoin that they mine to pay for their operations. They're using that to pay for the energy costs and for all the equipment that they're mining. So when we see the miners dumping, a significant portion of their holdings onto the market, that means that, they are suspicious that we're reaching a point where the market is coming to reaching a market cycle top. And that's what we saw here in December. Miners started to dump a large quantity of coins onto the market starting right at the beginning of December of 2020. They basically dumped through the first half of December and then just sort of started acquiring again. It sort of leveled off once we got up to 40, 50, 60K, because there was a mix of acquiring new coins through their mining operations and selling. So we leveled off. There was a drop in May, so they capitulated some just like everyone else did. Then they started acquiring again. And notice we've been doing nothing but acquiring Bitcoin, or the miners have been doing nothing but acquiring Bitcoin now, all through basically the entire second half of 2021 and into 2022. Okay, so the next thing I want to quickly look at is the Bitcoin held on exchanges. Notice what we're looking at here is a percentage. What percentage of the Bitcoin supply is held on exchanges? So in general, the lower this value goes, the more that's being pulled off of exchanges and put into alternative storage solutions. So think of, long-term holders holding the asset in cold storage. And what you've seen is, ever since, we're looking at the end of 2020 into 2022. You've seen that the amount of Bitcoin on exchanges has just been dropping. Okay, it's been dropping, and the only time that it really increased in all of 2021 was around here in at the end of April and into May. So with the capitulation event, we saw a large increase in the amount of Bitcoin held on exchanges. This basically sort of leveled out. Actually, if you look right here at the end of May, and we just sort of stayed where we were until you saw a large quantity of Bitcoin being pulled off exchanges right here in the end of July. So this is July 27th. And then right here, you see a large quantity get pulled off. And then again, all through August and into September, a large quantity was being pulled off. Now, notice again, we're seeing this continue down. So long-term holders are taking Bitcoin off of exchanges and putting it into their wallets. Now, just remember, this doesn't always mean you're looking at an immediate recovery, okay? So these things that we're looking at right now are sort of supply side measures. Demand side you can think of as essentially your retail market. It's a simple way to think about it. Demand is your retail market, and where are they at right now? Okay, so the last thing I want to show you guys is the amount of demand for Bitcoin can be thought of in terms of social metrics, all right, or sentiment measures. So things like the fear and greed index, for instance, or in this case, what I want to show you is Google Trends. So the amount of individuals searching for an asset. And this can broadly be thought of as times when interest in the asset is at its highest. So let's do the last 5 years for the term Bitcoin. Notice how, other than the magnitude of the level, this is essentially a price chart for Bitcoin. So you see these peaks occur at the identical times when you are seeing price spikes, right? So if you go back to 2017, notice where you're hitting 100 at. You're hitting 100 right when Bitcoin was hitting up to close to $20,000. Then you're hitting your peak interest in Bitcoin right here in January when Bitcoin had just went up, up to around $40,000. And Bitcoin never got the same type of retail interest again, or because a lot of that was going into the term crypto, because or altcoins, because people are losing interest in Bitcoin because it's already made its big move, and that interest is moving into other assets. And this just certainly goes. These things go hand in hand with one another. And what you're seeing right now is the retail market doesn't have any interest in Bitcoin, and that's because and that's why the long-term holders are acquiring. The long-term holders don't acquire the asset when the retail market is FOMOing in. They are selling during these exact times. In fact, if you wanted to know precisely when people are going to take profits, you could just kind of look when there's a significant spike in retail interest, and that is when your long-term holders will start taking profits because it's their exit liquidity. They're using the retail market to exit the market themselves. So retail starts FOMOing in, you start getting this huge spike in the interest in Bitcoin. So right around November of 2018, even before that, really. So basically from May until November, retail interest is building, and then it just explodes because every single news outlet is covering it. And the same thing happened here from October into November, and then ultimately into January and February. You had massive retail interest, and then times that retail interest will also spike are during capitulation events. So, like right in the middle of May, because people want to know what's going on. What's this thing they're missing out on? How are all these people making all this money? And, are they going to miss out on it by not getting involved? So, that's kind of what you see happening right here. But right now, what you're seeing, there's just not a whole lot of interest. There was a little spike here right around the end of January into the beginning of February. And, if we just go look here, right around the end of January, we're saying, so right around here, this is when there was like a spike in retail interest, when this big price move to the upside happened. So things like that will kind of give you an indication as to demand. Now, the long-term holders, though, are the ones who ultimately are going to create these moves because they will be acquiring until you sort of get to a point where you're at supply and demand disequilibrium, and then the price starts going up, and then your retail market starts FOMOing in. And then, what we do on this channel is we're trying to lay the foundation, and I repeat it over and over and over and over and over again. You want to be acquiring the asset at the same time that the smart money, the long-term holders, are acquiring the asset. My entire point of having this channel is to attempt to get you to think like the smart money and stop thinking like these guys here and these guys here. You want to be acquiring the asset when we're at a baseline in retail interest. So when retail interest is at its lowest, that's when viewers of my channel, hopefully, if I can say that I accomplished anything on this channel whatsoever, is that viewers on my channel were, acting responsibly with their money, first of all, and doing it in a manner such that they are thinking like the smart money, acquiring the asset when everyone else is scared to get into the market. That's when they should be brave in getting into the market. It's not financial advice, but it's at least my hope. So that's all I'll say about that, guys. And that's going to be it for this one. If you guys like this type of content, hit like and subscribe. You could head over to the Discord channel and sign up for the DCA Index risk model. I'm taking it down at the end of the week. I'm working on some new things, and it's going to be available for anyone who signs up for it. But after the end of the week, you won't be able to sign up for it anymore. Because some new things are in the pipeline, and I'm going to just completely take it down until then. So until next time, as usual, see you.